Hello and a warm welcome. You've joined us in Market Cafe right here on ET Now. I'm Ashesha and with me is Kanishka Sarkar joining us from our Delhi studio. And this is a show where we take you through all the cues that we are getting from the global market overnight, which are the stocks that will be in focus either based on news or other brokerage reports, and we'll prepare you for today's trading session. But first up, let's get started with all the cues that we are getting from global markets. And Kanishka, US markets first up.
That's right, Ashesha. Very good morning to you, first of all. After a day of a muted trend, the US stock futures, they're largely steady ahead of the June big jobs report that is due later in the day today. Now, if you look at the stock movement overnight, the S&P 500, that rose almost 0.5% to notch a record close. The broad market index that also posted a fresh all-time intraday high. The tech-heavy Nasdaq composite, that rallied almost 1% to a record close, whereas the 30-stock Dow index, that trailed behind with a narrow loss of 0.02%. Now remember, these moves followed an announcement from the US President Donald Trump on Truth Social that the US has struck a deal with Vietnam, which includes a 20% tariff on imports from the country. Goods that originated in another country but were transferred to Vietnam for final shipment to the US will be levied a 40% tariff duty. Now, traders are now awaiting that June non-farm payrolls reading. Economists polled by Dow Jones, expect that the US economy added about 110,000 jobs last month. However, this compares to May's gain of 139,000 jobs. Now remember, economists are also seeing the unemployment rate inching higher to that 4.3% level, up from 4.2% in the month of May. Other than that, if you look at investors, they're also following along the progress on Trump's tax mega bill. That is the big, beautiful tax bill, which finally passed the Senate on Tuesday. The bill has now returned to the House, where negotiations among Republican lawmakers, they remain heated. Now remember, Thursday will also be a shortened trading session with the New York Stock Exchange and the Nasdaq closing at 1 p.m. US time. And also the US markets will remain closed on Friday for Independence Day.
Yes, US markets will remain shut tomorrow, and it will be a half day in today's trading session as well. But shifting focus from US markets to commodity markets then, and lots happening in the world of commodities as well. First up, let's put the spotlight on oil, because Brent crude today, although it is sitting with a cut of nearly 0.5% as we speak, yesterday it rose nearly 3%, and currently it is trading near that $68.8 per barrel mark. Now, as Kanishka mentioned, trade deal with Vietnam has now been signed by the United States, and there is more optimism that perhaps trade deal could be signed with other countries as well ahead of that July 8 tariff deadline. So on the back of this optimism, we saw that uptick come in the oil market as well, currently trading near that $69 per barrel mark. But apart from that, Citi has come out with a report, and Citi believes that OPEC Plus could slow down its production hike if Brent crude nears that $50 per barrel mark. All eyes, of course, will be on OPEC Plus meeting, which is scheduled to happen on Sunday, and expectations are that perhaps OPEC Plus group could consider another output hike of 411,000 barrels per day for the month of August as well. But yes, Citi expects Brent crude prices, if at all they were to hover near that $50 per barrel, OPEC Plus could slow down the pace of output hike. But let's also talk about the yellow metal market, because gold continues to remain in focus. Today, gold is sitting with a cut of nearly 0.4% as we speak. It has snapped its 3-day gaining streak to trade near that $3,345 per ounce mark. But remember, all eyes are on the payroll data that will come in from the United States, and any cues from there will determine the path of rate cycle by the Federal Reserve, and that will ultimately decide the path for the yellow metal as well. So that's how the commodity markets are positioned at this juncture, Kanishka.
All right, those are the cues that we're tracking from the commodity market. But let's shift focus to the domestic market then. Now, it was a muted day at the Lal Street yesterday, dragged by Shriram Finance and HDFC Life. Broader indices also mirrored similar moves. Now, let's go across to Snehi, who's getting us the roundup from yesterday's market action.
Well, yes, good morning. Expiry day today, and lots to watch out for in terms of where the market will be trending today. But let's once again revisit what yesterday's trading session held for us. You had Nifty that was absolutely lackluster once again. Almost a 0.5% cut came in from the Nifty yesterday, but in the last few minutes of trade, we saw little bit of a recovery from the day's lowest point on the Nifty, and we've managed to close slightly above the 24,450 mark on the Nifty. Similar moves coming in from the Sensex as well, where we saw a little bit of a cut, but it was really the entire banking and financial space along with PSU banks that was not doing very well in yesterday's trade. Almost an 0.8% cut is what we've seen on Nifty Bank. If you take a look at the broader end of the market, the Nifty mid-cap also recovered smartly from the day's low, but the small cap was absolutely in tandem with the benchmarks. About a 0.4% or a 0.5% cut is what we saw on the small cap index in yesterday's trading session. Positivity in the market was led by names like Tata Steel, JSW Steel, Asian Paints, Ultratech Cement, Maruti Suzuki. Remember, Asian Paints also recovered from the red to the green yesterday after the CCI probe news was out, but there was a November report that also came out saying that Asian Paints will not be affected too much by this probe, and on the back of that, a very smart recovery is what we saw in Asian Paints. The entire metal pack, including Tata Steel, JSW Steel, SAIL, NALCO, Hindalco, Vedanta, the entire metal pack was the outperformer in yesterday's trading session. Of 1.5% uptick is what we've seen on the metal space. This was joined in the green by IT and Pharma. On the flip side, what did not do well at all was the entire Nifty Realty pack, followed by a cut in financials. You had FMCG that was in the red yesterday. So largely that is what the market setup was. Now, when we interacted with our technical experts on the closing show yesterday, here's what they had to say about where we can expect the market to open today. Nilesh Jain said that he expects the open to be around 25,500 and a 100-point expiry range is what we can see today. For Nifty Bank, he expects some consolidation to continue given the run-up that Nifty Bank has seen, and he says 56,600 to 57,400 could be the very short-term range for the Nifty Bank. Nagraj Shetty on the flip side believes that Nifty, he doesn't expect to see a big decline given the recovery that we saw in last few minutes of trade yesterday, and for Nifty Bank, he's seeing 56,250 as the support. So these are going to be the key levels to watch out for on today's expiry trading session.
Those are some of the important levels to watch out for in trade today. But how is the FNO setup looking like this morning? Pulkit is now joining us with all details. Pulkit, over to you.
Good morning, Ashesha. So if we talk about the FNO setup for India Wix, it is 12.44, comfortable position, no need to worry. When it comes to the put call ratio changes, for Nifty, it is 0.61. It is near oversold, but it is not yet oversold. And today the expiry, since the expiry is there, so maybe there we can see some drastic changes here. If we talk about Bank Nifty, it is 0.95, comfortable position. Nifty Index future change in open interest, it is minus 3.17%, and the trend is long unwinding. When it comes to the most active options for Nifty, for call and put, both are 25,500. But for call, we have observed call writing is going on. And for put, it is put short covering. Put short covering means the people who have created put short positions to support at that level, now it has breached it. And now the traders are covering their positions to clear that particular put short. If we talk about the highest option open interest, for put it is 25,000 and for call it is 26,000. When it comes to the Bank Nifty, the change in open interest for index future is around minus 8.3%, and trend is again long unwinding. And highest open interest is 56,000 for both put and call. If we talk about the long positions, so for FIA long position, it is around 33.39%, which is reduced from yesterday. Earlier, it was 36.66%. For DII, it is 62.85%, and for retail, it is 53.33%. And when we talk about FNO ban securities, only one security is there that is in ban, that is RBL ban.
All right. Thank you so much, Pulkit, for getting us that FNO segment roundup. But after a muted day on the Lal Street, let's also take a look at all the stocks that are likely to buzz and trade today on the back of news flow. Rabinder is joining us with just that list. Rabinder, good morning. Over to you.
Well, yes, lots of stock that can be focused. Some of on the back of Q1 update, some of back on their block deal. So first, let's start with Indian Bank, where company has announced their Q1 FY26 business update, and the company said that the total business was up by more than 10% year-on-year basis, and total deposit was also up by 9.3% year-on-year basis at 7.4 lakh crore. Apart from this, PNB Bank has also announced their Q1 update, where company said that the global business was up by 11.5% yearly basis at 1.9 lakh crore. And if we talk about global deposit, then global deposit was was also saw an uptick of more than 12.5% year-on-year basis. Mahindra & Mahindra Financial has also announced that Q1 business update, and company said that the overall disbursement was approximately at 12,800 crore with an year-on-year growth of approx 1%, and the collection efficiency is estimated at 95% for Q1 FY26. Apart from this, Avenue Supermarts can be in focus, where company has also announced the Q1 FY26 number, and company said that the standalone revenue from operation for the quarter ended June 2025 stood at 15,933 crore, which saw an uptick of 16.2% year-on-year basis, and the total stores as of June 30, 2025 stand at 424. Apart from this, Hindustan Zinc can be in focus, where company said that they have achieved their highest ever first quarter mined metal production of 265 KT, which was up by 1% year-on-year basis. Moving to next, on back of block deal, Nykaa can be in focus, where as per ET, Harinder Pal Singh Bagga, one of the Nykaa early investor, is set to offload a 2 to 2.5% stake in $150 million, and which is around 1,200 to 1,300 crore via block deal. Apart from this, Nestle India can be in focus, where Nestle India said that the company is adding 20,300 ton per annum to its Maggi noodles production at the Sanand factory with an investment of 105 crore, and this is expected to be complete for FY25-26. Moving to next, Aurobindo Pharma can be in focus, where Curatech Biologics, which is a subsidiary of the company, has received marketing approval from European Commission. And lastly, Motilal Oswal can be in focus, where Motilal Oswal said that the Motilal Oswal Asset Management Company has crossed 1.5 lakh crore in AUM, standing position as a growth focused fund house. So back of this, Motilal can be in focus.
So stocks in focus based on news. Rapinder, thanks so much for joining us with all those details. But which are the other cues that you need to keep an eye out on in today's trading session? Snehi is joining us with a roundup of exactly that. Snehi, over to you.
Well, yes, lots of cues to watch out for. It's the expiry trading session that's going to be the most important one to watch out for. Other than that, from the US, keep your eyes on non-farm payrolls, initial jobless claims, trade data, and remember the market will be closing early on account of the 4th of July Independence Day celebrations in the US. From Eurozone, expect to see HCOB services PMI. From China as well, we'll have the Kexin Services PMI numbers come out, and from Japan, S&P Global Services PMI numbers will be out as well. But shifting focus back home in terms of corporate action and board meetings, it's going to be the last day to buy shares of a whole host of companies if you wish to be eligible for their dividend and wish to meet the record date. And these names include Tech Mahindra, Axis Bank, Bharat Forge, Biocon, Escorts, Navin Fluorine, Nestle, M&M, Tech Mahindra. Lots of stocks are going to be in focus on the back of this. And it's also going to be the last day to buy shares of Concor, which is Container Corporation, to be eligible for their 1:4 bonus issue. In terms of AGMs, annual general meetings, keep your eye on Trent, Cyan, DLM and SRF. These stocks will be in focus on the back of their AGMs. And in terms of other events, expect to see some commentary coming in from ECB, because they are going to be publishing their account of the June policy meeting. And Atlanta Fed President Raphael Bostic is going to speak. So some Fed commentary is also going to be key to watch. So keep your eye on all of these cues. All of them are going to be very crucial to track.
Yes, several important cues and events to watch out for in today's trading session. Snehi, thanks so much for joining us with that. But shifting focus to how Asian markets have opened this morning, and first up, GIFT Nifty is suggesting a positive start for the Indian markets. GIFT Nifty is now up nearly 22 points as we speak, 25,568. But Japanese market Nikkei, that one has started with a negative bias, down nearly 8 odd points as we speak. Hong Kong market, meanwhile, has also started on a negative note, down 0.6%, 153 points gone on Hong Kong market or Hang Seng Index as we speak. Shanghai, meanwhile, has started on a positive note, in fact, absolutely flat as we speak. ASX 200, that one has also begun in the red. It's down 0.3% as we speak. 8569 is where it is currently trading. So Asian markets have largely started either muted or slightly negative, but GIFT Nifty is suggesting a positive, or rather a slightly positive start for Indian markets, up nearly 17 points. 25,564 is where it is currently trading. Kanishka.
That's right. A positive start is what we are penciling in for the Indian market. But moving on, Gautam Shah, the founder of Goldilocks Global Research, discussed with us his views on various sectors in the current market. While he remains bullish on financials, he believes that the large cap IT companies continue to face headwinds. Let's listen into an excerpt of that conversation. conversation we had with him.
I think the price action has been crystal clear. I think we've been maintaining a bullish view despite all the uncertainties in the recent past. The setup continues to be quite solid. The Nifty went through a 5-week lull where a lot of people thought that it was distribution, but actually it was consolidation. It was about building a higher base. And thereafter, once the Nifty got past 25,200, the momentum has only got better. Even now, there are no real signs of topping out. I think the market is headed towards the previous high of 26,200. And we review there. I think just stay bullish, do not overthink, participate, ride this move, be in the right pockets. And it's great to see the broader markets do so well, with the mid-cap 100, the small-cap 100, all doing well with the large caps. So we seem to be in a bit of a sweet spot, and I think the next 10, 12 days should be sorted. But when the earnings season, kicks off is when we'll have to just take a step back and maybe review the scene. But till then, all is well.
Okay. So next 10, 12 days, just stay with the market. Don't go long, don't go short. But then what happens after that? If the earnings season is not satisfactory, little bit of miss, little bit of hit, if it is okay, then are we in for a bad patch?
It's unlikely because I think we've handled a lot of stress locally and globally. I mean, let's not forget we went through a bear market for the broader markets between October 24 and March 25, where the average decline in stocks was about 36-37%. So coming out of that bear market, coming out of some sort of a slowdown on an economic front, I guess the numbers should only pick up with whatever I gather from many of my influential clients and what I, when we attend the con calls and speak to many corporates, it does seem that it would not be too bad. In fact, it can only get better from here.
Gautam, the last time you connected with us back in May, you were very positive on Reliance as well, when you actually said that Reliance, the comeback is very good. And we have seen that actually shaping up. Reliance from all the way to close to 1,150 odd rupees is now sitting at 1,500 rupees. But Gautam, these are the levels that the stock is retesting, the levels of September highs. Why do you believe this time is different for Reliance? Because now that we are seeing some of the brokerage reports trickling in, they are going ahead and raising the target. But what exactly are you looking at when it comes to the technical front?
Well, more than the specific stock, I think the fact that there are too many things firing in for the Nifty. I mean, we saw the banks do so well. We saw Reliance making a comeback. We saw IT coming back very strongly from the recent lows. So that just helps the overall market because there are too many, factors and too many sectors which are batting for the Nifty. The Reliance comeback is obviously positive. I don't want to comment on specific stocks, but I think the entire sector looks quite encouraging and high probability that it goes on to test the previous high. But we really take it from there. But more than Reliance and energy, I think the sector that we've been very bullish on for the last 3 to 6 months is financial services. And I think it's going to go on to do bigger things. Valuations are comfortable, fundamentals are excellent, earnings visibility is there, and smart money action seems to be there, and the charts are in great shape. So I think financial services is really the place to be in. And if you have to participate in this market rally, you need to be in financial services, housing finance companies, insurance companies, NBFCs, banks for the next 3 to 6 months.
All right, so that's the word coming in on where the markets are headed from here on. But what is the global macro setup looking like and what impact will it have on emerging markets, including India? To discuss this, we are now joined by Ed Yardeni, President and Chief Investment Strategist at Yardeni Research Inc., now joining us. Ed, thank you so much for taking your time out. And several developments overnight, one with respect to tariff, where US has gone ahead and now probably announced a deal with Vietnam. Tell us, what does this mean for several other countries? And do you expect US to sign deals with other countries as well ahead of that July 9 tariff deadline?
I think we'll probably will hear about a few more deals, but I don't think we're going to have all of the deals and maybe not even half the deals. Looks like they're happening, but rather slowly. So I think on July 9th, the president may just impose some tariffs. Negotiations continue to go on, and maybe by doing that, the negotiations will get speeded up.
All right. Hi, Ed. This is Kanishka also joining in. Very good morning to you, first of all. Now, let's, stay with the tariff deadline that we were talking about. I wanted to understand what's your view on India's landscape in this, India's position in this global investment landscape, especially, the kind of defense developments that we have had. How do you see India placed versus the other emerging markets, given that tariff deadline is looming on July 9th?
Well, I think India certainly is in discussions with the United States. I think it's going to be in the interest of the United States to make sure that a deal is worked out and that it benefits both sides. India is a very important counter point for geopolitical purposes to China. And so I think the United States is going to be somewhat easier on India than it has been on some of the other countries.
So that's as far as impact on India and several other countries is concerned. But Ed also wanted your thoughts on the kind of impact tariff could have on inflation and consequently its impact on the bond market. How do you assess the situation as of now?
Well, at this point, we have, I think we've all been surprised that we haven't seen much of any impact of tariffs on inflation. Looking at the latest numbers through May, inflation has been remarkably moderate. The Fed chairman, Powell, has said that he doesn't anticipate that there could be inflation showing up at summer months. In other words, the data for June, July, August. And I agree with that. I think we will see some upward pressure on inflation. And of course, we also have the very weak dollar. The very weak dollar is also going to put some upward pressure on inflation. But I would point out at the same time that there's a lot of deflation coming out of China. China just continues to produce more than they can consume, and they're dumping it in global markets everywhere. And that's keeping a lid on a lot of inflation around the world. So I don't think inflation is going to be a serious problem. I think it'll be a problem for the next few months. I think it's probably one of the reasons the Fed will hold off on any easing move anytime soon.
All right, so that's the view coming in on inflation. But now I want to talk about the markets. Now, you had some time ago said that the geopolitical crisis are 2025's dominant bull market, and that one could look to rotate into safe haven assets like gold and defense stocks. But do you still hold that view, given the kind of rally we have seen in the US benchmark indices, especially driven by tech stocks?
Well, I've been bullish on this market since November of 2022. The bull market started in the United States in October of 2022. And back then I was recommending and still recommend overweighting information technology, overweighting communication services, industrials, and financials. Those have all worked out very well. It was painful, of course, during the correction because they fell most sharply, but they've also come back most quickly. I also came up with the idea of overweighting energy, but so far that hasn't worked out, and I've kind of scaled back on that recommendation. On a kind of a global asset basis, I think that gold has been a excellent way to diversify a portfolio against the risk that tariffs represent, against the geopolitical risk, especially. Defense stocks still look very good to me on a global basis. So there's still plenty of opportunities in this market, which I think is still very much a bull market here, and by the way, in India too.
You're saying that you're bullish on defense stocks globally, in particular in India. If you can put the spotlight, what are your thoughts on the Indian equity markets, especially India versus other emerging markets?
Well, one of the positives for India is the low oil prices. India imports a lot of oil, and to have the price of oil so low is of great benefit to emerging markets like India. It's also obviously a positive for China, but for the exporters of oil, it's not a positive, obviously. But India also, I think, continues to benefit from the diversification of global supply chains. I think a lot of global supply chains that are continuing to move out of China have moved to places like Southeast Asia, including particularly Vietnam. But I think India has also been a point of destination for a lot of global diversification of supply chains. India has the benefits of a very young population, has the benefit of a population that speaks English. For global trade, that's important. For global interactions, that's important. And then, of course, India has a wealth of resources, not just labor resources, but the potential for a growing middle class is extremely important in India.
All right. Thank you, Ed, for that view on the Indian economy as well as the equity market. And thank you so much for joining us this morning and helping us with your views on the global market. Have a great day ahead. Thanks.
You too.
All right, then moving on. The beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan our investments. And to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. Now, as part of this campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIPs continue. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
But with that, let's slip into news for the hearing impaired.
Rapido and others to charge passengers as much as twice the base fare during peak hours under its revised guidelines. Moreover, the fares during the non-rush hours could not be less than 50% of the base rates. Now, earlier, these ride-hailing firms could charge up to 1.5 times during peak hours of travel. The move is likely to hike the cost of travel at a time when some states are enforcing a strict fuel ban on old vehicles, adding to anxiety over growing cost pressures. Now, what are the implications? My colleague Samir is here with all the details.
The government has permitted this surge pricing up to 2 times the base fare for the cab aggregators, which include players like Ola and Uber. So this increase in the surge pricing or the latest guideline, it has been issued as per the Motor Vehicle Aggregator Guidelines 2025 issued by the Ministry of Road Transport and Highways. Now this surge pricing is basically a pricing mechanism where the price is actually adjusted according to the demand and supply, in the sense that the demand that comes from the users, from the people who are looking to book a cab, and supply is that availability of the cab services. So usually when there is a peak hour, then the prices goes up. As of now, with the revised guideline, government has permitted to increase the base fare up to 2 times. Twice they can increase the base fare conditionally that it should be peak hours and when there is a huge demand. Usually these sort of situation arises when there is a bad weather, in case of any sporting event, during concert, or even when the rainy days. So these sort of situations are there when usually the availability of cab in numbers it is less, and then the surge price it applies, and with the revised guideline it will be 2 times of the base fare. Currently, if you see, the base fare can be increased maximum up to 1.5 times, but certain relaxation has been given by the government, and this will bring relief to the Ola and Uber. Their drivers can actually make up more money, but definitely the users, the end users, or the people, those who are booking the cab, they have to pay a little bit more. Now this, the important point is that these guidelines are advisory in nature. The states are advised to adopt these guidelines within 3 months from the date of the issuance of guidelines, which is 1st of July 2025, and it is likely that by September 2025 we can see the impact of these guidelines, or the surge in pricing up to 2 times will be applicable by the cab aggregators, whether it be Ola or Uber.
Guidelines coming in for cab aggregators, but Times Network also got reactions from some consumers on this story. Let's take a look at what the consumer feels.
I think I will more suggest public transport because that's very cheap and very budget friendly for like travelers like me and others. But Uber is very more cashier, and I don't think that's very worthful for like hours like transport like travelers.
Do you also think the same?
Yes, it's pretty expensive and I prefer to travel in public transport because it's expensive for the middle classes. Therefore, I will prefer to travel in normal auto or public transport.
All right, those are the views coming in from consumers on the hiked rates that cab aggregators have been allowed to charge. But moving on, big reforms coming for the gas-based economy. Now, sources say that the government is eyeing amendments to the PNGRB Act to accelerate reforms. Prakash is joining us with all the details.
Yes, sir. With an objective to become a gas-based economy, the government is planning mega reforms in gas marketing and pipeline infrastructure, a very significant development coming in. In fact, the process has been initiated and that will be done through necessary amendments to the existing act. Sources are indicating that the Oil Ministry has prepared a cabinet note to make necessary amendments to the PNGRB Act. In fact, the process has been initiated. Oil Ministry will seek a cabinet note to implement the proposed reforms measures. Along with that, marketing and pipeline infrastructure will be developed for all new energy sources that include green hydrogen, green ammonia, ethanol, CBG, among others, including traditional sources. In fact, the PNGRB will be empowered to regulate pipeline infrastructure for all kind of energy sources. There will be a transport system operator, that is TSO, which will manage all common carrier pipeline in the country. Transport system operator will be brought in under PNGRB regulation as well. In fact, natural gas pipeline of GAIL, including other companies, will be part of TSO, and the government will hold majority stake in transport system operator. Along with that, companies such as ONGC, HPCL, GAIL, IOCL, and EIL will hold equal minority stake in TSO.
Coming in for gas-based economy. Prakash, thanks so much for joining us. But shifting focus to an ET now exclusive then, and no immediate regulatory restrictions have been planned by IRDAI on banker assurance model. Anurag Shah is joining us with more details on this.
So it's a relief for insurance companies, particularly life insurance companies who are dependent on bank assurance channel. The companies for which the premium is high gathered through the bank assurance channel. So as per our sources, insurance regulator IRDA is not planning any sort of restriction on bank assurance regulations. So previously there were reports that due to the mis-selling complaints, insurance regulator IRDA may come up with a capping of bank assurance premium through a particular parent bank. But as per our sources, as of now, the IRDA is not planning any restrictions or change in regulation for bank assurance norms. And as per our sources, the mis-selling complaints through bank assurance channel is also not very high. The absolute number of complaints through bank assurance channel is not much alarming. So due to all these factors, considering all these factors, IRDA is not planning any sort of restrictions or change in regulation in insurance bank assurance model, and mis-selling complaints will be dealt by a regulator on the case-to-case basis, and action will be taken by regulator on case-to-case basis. No particular change in regulation IRDA is planning, and government has also conveyed to regulator that bank assurance channel is an important channel to increase the penetration, especially in the rural areas. In the people of rural areas trust bank branches. So to increase the penetration, to reach the target of insurance for all by 2047, bank assurance model is an important model for the insurance distribution. So government is also of view that mis-selling complaints should be dealt, but regulator will not come up with any blanket change in regulation, mis-selling complaints will be dealt on the case-to-case basis.
All right, then those are the latest updates coming in on the insurance sector. But moving on, Prime Minister Narendra Modi arrived in Ghana's Accra on Wednesday, marking the first visit by an Indian PM to the African country in over 30 years. Now, the Indian Prime Minister was personally received by President John Mahama, who presented him with a ceremonial guard of honor. Now, calling the honor a responsibility, he pledged to keep strengthening India-Ghana friendship. Later, Prime Minister Modi held a delegation-level meeting with President Mahama. Various MOUs were exchanged between the two nations. PM also said that India plans to double trade with Ghana within the next 5 years and offer its digital payment system, Bharat UPI, to boost financial connectivity. Let's bring in Srinjoy Chaudhary to talk about the significance of this visit.
It's a very important country because historically, Ghana and India have worked together even before Ghana became independent in 1957. One country that fought for Ghana's independence, which was 10 years after India's, was India. And India constantly and consistently spoke about Ghana's independence. And this is something that Ghana, Accra is actually grateful to New Delhi about, because historically this support that came for the Ghanaian independence movement is something Ghana remembers very positively. There are some countries in the world where India's support, even before independence, is remembered. Ghana is one, Indonesia is one, there are others, of course. But it's very important that to remember that, and we have to see how Ghana sees us. Ghana sees us as a country that stood by it when it needed us most, when it needed support the most, when Ghana was not even independent. There was India saying Ghana should be independent, and that is something Ghana has not forgotten. So when Prime Minister says that, yes, I take this award on behalf of 1.4 billion people, he is right, because that award is for India, for the people of India.
Srinjoy, thanks so much for joining us. But Prime Minister Narendra Modi also shared that India and Ghana are planning to strengthen cooperation in counter-terrorism. Listen into that excerpt.
हम एक मत है कि आतंकवाद मानवता का दुश्मन है। आतंकवाद के खिलाफ हमारी लड़ाई में सहयोग के लिए हम घाना का आभार प्रकट करते हैं। इस संदर्भ में हमने काउंटर टेररिज्म में आपसी सहयोग को और मजबूत करने का निर्णय किया है। यूएन रिफॉर्म्स को लेकर हमारा दृष्टिकोण एक जैसा है। पश्चिम एशिया और यूरोप में चल रहे कॉन्फ्रेंस को लेकर हम दोनों ने गहरी चिंता व्यक्त की है।
All right, time now to shift focus on some more news updates. The Union Minister for Parliamentary Affairs, Kiran Rijiju, has announced that the monsoon session of Parliament will begin from July 21st and continue till August 21st, a week longer than planned earlier. In view of the Independence Day celebrations, there will be no sittings on August 13th and 14th.
SpiceJet flight from Goa to Pune as a window frame dislodged, triggering panic among passengers. SpiceJet said only the inner frame was affected, with no safety impact, and all passengers are safe.
The Amarnath Yatra has officially commenced in Jammu and Kashmir as devotees embark on the annual Himalayan pilgrimage with heightened security and thorough arrangements in place.
Monsoon havoc has struck Mandi in Himachal Pradesh, causing significant disruption and damage. Heavy rains have led to flooding and landslides in the region, tragically resulting in the death of 11 people.
All right, the latest on tariffs then. Donald Trump has claimed a new trade deal with Vietnam, slapping a hefty 20% tariff on Vietnamese imports and an even steeper 40% tariff on transshipped goods. However, it is much lower than the tariff he had announced on Liberation Day, which was 46%, one of the steepest for any country. In return, Trump says Vietnam will open its market completely to U.S. exports at zero tariffs, paving the way for American products, including SUVs, to flood in. While Trump hailed the move as a total market opening, the timeline and official confirmation remain unclear. The announcement comes just days before a tariff deadline that could see U.S. duties surge on imports globally.
The US has lifted export license requirements on chip design software sales to China as a part of new trade deal. The move allows companies like Siemens to freely supply critical tech to Chinese customers again. In return, Beijing has agreed to accelerate approvals for key mineral exports and ease trade in other areas like ethane and jet engines. US private payrolls shrank by 33,000 in the month of June, marking the first monthly decline in over 2 years as economic jitters cooled hiring. Losses hit sectors like business services, education and finance, though hospitality and manufacturing still added jobs. Despite the dip, layoffs remain historically low. The ADP report comes ahead of Thursday's official government jobless claims data, which often diverges sharply from ADP's figures but would be closely watched out for given signals of economic resilience.
Next up, U.S. House Republicans are scrambling to lock in the votes for Trump's sweeping tax cut and spending bill as conservative holdouts threaten to derail it. The bill, which could add $3.4 trillion to the national debt over a decade and slashes $900 million from Medicaid, narrowly cleared the Senate but faces fierce resistance in the House. With only a slim GOP majority, Speaker Johnson is racing to persuade defectors before the July 4th deadline Trump is pushing for. Tesla delivered about 384,000 vehicles in the second quarter, marking a 14% year-over-year drop, its second straight quarterly decline. While deliveries beat some pessimistic forecasts, they still reflect mounting pressure from Chinese EV rivals and political backlash against CEO Elon Musk. Despite production of over 410,000 vehicles, Tesla's market share is still under strain, and shares remain down over 20% this year. Investors now hope Q2 marks the bottom as Tesla navigates recalls and competition.
Chinese EV giant BYD has indefinitely delayed its planned Mexico plant, citing trade tensions and policy uncertainty fueled by Trump's aggressive tariff threats. BYD has been eyeing sites in Mexico to expand in the Americas, but now says it will wait for more clarity before investing. Meanwhile, US automakers like GM are shifting production back home to dodge new costs. Meanwhile, Microsoft is cutting about 9,000 jobs, which is less than 4% of its global workforce, in the latest round of layoffs, as it aims to streamline operations and flatten management layers. This follows earlier cuts affecting nearly 6,000 employees in the month of May. The move comes as Microsoft starts its 2026 fiscal year despite soaring costs and record high stock prices. The tech giant reported nearly $26 billion in net income last quarter, yet joins another wave of tech firms tightening belts amid shifting market dynamics.
The Pentagon is now saying recent US strikes have set back Iran's nuclear program by up to 2 years, a far more optimistic assessment than early estimates. Now, the June 22 strikes targeted 3 nuclear facilities with massive bunker-buster bombs and Tomahawk missiles, leaving Iran's key sites completely obliterated, according to officials. However, nuclear watchdogs and experts warn that Iran may have moved enriched uranium beforehand, raising doubts about the true impact. Still, Washington insists that the mission has dealt a major blow to Tehran's nuclear ambitions, at least for now. Iran has suspended cooperation with the UN's nuclear watchdog, effectively barring inspectors from monitoring its nuclear sites. The move, signed into law by the president, intensifies fears that Tehran could push ahead with developing nuclear weapons under the radar. The decision follows recent US and Israeli strikes on Iranian facilities and rising tensions over uranium enrichment. While Iran insists its program is civilian, experts warn it now holds enough enriched uranium for multiple bombs. The IAEA says it's seeking official clarification but remains deeply concerned.
Those are some of the global stories that we are tracking this morning, but let's shift focus back to Indian equity markets, and a whole host of stocks will be in focus today. First up, let's talk about Nykaa, because it is set to witness a secondary stake sale as its early investor Harinder Singh Banga gears up to offload shares worth up to 1,200 crore rupees through a block deal which is likely to happen today. Snehi is now joining us with more details on this. Snehi, over to you.
Well, yes, so Nykaa will be in focus today because we understand from an Economic Times report that an early investor in the company is all set to sell some part of his stake, and this investor is Mr. Harinder Singh Banga, the founder of the Caravel Group. He plans to sell around 2 to 2.5% stake in the company. As per latest shareholding, he owns about 4.97%, so almost a 5% stake in the company. So he's looking to trim about half of that. Sources to ET now, they've also said, they've said that shares are being offered at 4% discount to Wednesday's closing price of 211.8 rupees. The deal is estimated to be around $150 million. That's anywhere between 1,200 and 1,300 crore Indian rupees. And on the flip side, FIIs are expected to be buyers. Just to give you a little history, Banga has been gradually trimming stake. He sold 1.43% in August of last year, bringing his stake down from 6.4% to the current 4.97%. And this was done for 851 crores in the open market. And prior to Nykaa's IPO in November of 2021, he held an 8.7% stake. So that's the reason why Nykaa could be in focus today. We can expect to see block deals on the street.
Deal expected today, Nykaa in focus on the back of that. But let's also put the spotlight on Tata Steel, because we have some important commentary that has come in from the AGM that was conducted yesterday. Some commentary with respect to green steel transition. First up, let's talk about UK business, where N. Chandrasekharan said that they progressed towards green steel emissioning. They decommissioned 2 blast furnaces in Port Talbot in the year gone by, and the transition to state-of-the-art electric arc furnace is likely to be completed by fiscal year 2028. As far as Netherlands operation is concerned, he also said that company is in discussion with the Dutch government for financial and policy level support. In fact, they are seeking some kind of policy support from the Dutch government as well. They are looking to reduce their costs across their business operations. On a consolidated level, Tata Steel is aiming to reduce costs by about 11,500 crores in FY26. Nearly 4,000 crores is likely to come in from India operations, and the balance 8,000 crores is likely to come in from UK and Netherlands operations. So some important commentary that has come in with respect to cost reduction plans of the government and transitioning both in UK and Netherlands. The stock in focus on the back of this.
That's right. We'll be tracking Tata Steel on the back of this AGM and the key takeaways from there. But with that, we're completely timed out in this edition of Market Cafe. But more news and updates coming up on the other side. So stay tuned for the market coming ahead.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At